have with us today the management represented by Mr. Yashpal Gupta, MD and CEO, Mr. Karunakaran, COO, accompanied by other members of senior management team. I would now like to hand over the call to Mr. Karunakaran for opening remarks. Thereafter, we can open the floor for Q&A. Over to you, sir.
Yes, thank you. Good evening, ladies and gentlemen, and I'm extending a warm welcome to this earning conference call of Repco Home Finance for the quarter ended 2021. I hope you and your loved ones are staying strong in this challenging time. As we saw last year, business confidence and momentum picked up meaningfully in the economy as the localized restrictions were relaxed one by one. The fact that the vaccination drive was on full swing also boosted sentiment and positively altered people's behavior. In the last quarter, we had shared that we restructured about 5.1% of the loan book under OTR 2 and had given guidance that incremental addition to this pool will be contained below 100 crores. I'm happy to inform you that additions to this OTR pool were contained below 70 crores and our ratio, that means restructured under OTR to the total loan book as end of September stood at 5.7%. In addition, we have already started a strong collection from OTR accounts and we are confident of resolving most of the cases before stipulated timelines. Our business performance showed handsome sequential improvement with sanction and disbursement rising over 100% over the previous quarter. The loan book contracted about 1% to sequentially settled at 11,889 crore. Prepayments and repayments at the end of the year ended September 2021 stood at 19%. On the profitability front, we reported multi-quarter high spread and margins, which is at 4% and 5.2% respectively. Because of our strong recovery mechanism and the risk-based model, we could able to maintain these spreads. The profit before the provision line grew by 14% year on year in Q2. Quarterly profit has come back to usual rate of 83 to 86 crores per quarter. Once the provisioning cycle normalizes in the next quarter and growth comes back, we should set target of achieving 100 crore profit per quarter. We reported ROA of 2.9% in Q2 as against 1.1% in Q1 of this current financial year. Even though our leverage is coming down steadily, our ROE at end of September 2021 stood at 17.3%. Stage 3 ECL provision improved to 43% and the overall ECL coverage at end of September 2021 stood at 77%. The balance between exposure to the self-employed and salary class people stood at 51.5% and 48.5% respectively. The share of non-housing loans, otherwise called loans against property or mortgage loan, is constituted about 18.7% of the total loan book. Cost to income ratio moderated to 17.2%. Total capital adequacy ratio continues to increase and be comfortable at about 33.2%, comprising of Tier 1 capital of about 32.7%. Retail network comprises of 155 branches and 22 satellite centers. Liquidity continues to remain robust for us, and as end of September, we are having 600 crore cash and cash equivalents in the balance sheet. and we are having more than 1,600 crores unutilized line of credit. Now I will summarize the key financial highlights for the year ended September 2021 before opening the floor for Q&A. Total income stood at about 656.9 crores. Our PAT end of September stood at 118 crores. ROA and ROE stood at 2.0% and 12% respectively. Loan book stood at 11,889 crores. Core profitability remained strong with robust spreads and margin of 3.9% and 5% respectively. I express my sincere thanks for all of you for joining the call. Now the floor is open for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. The first question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yeah, thank you for taking my questions and congratulations on the set of results. So just 2 or 3 questions here. First is on your disbursements. Sir, I was looking up, let's say about 2 years back, we used to do disbursement, or rather we had achieved disbursements about 850 crores. So what I'm trying to understand is, since then, we've already despite COVID coming in between, we have only gained from strength to strength, and despite that, our levels of disbursements kind of continue to languish. While if I look at some of your other peers, they have all been reporting, historical high levels of disbursements, just like you have reported the historical high levels of spreads and margins. So sir, when can we, I understand, last 1.5 years was difficult because of COVID, but when can we reasonably expect that you can go back to your old ways of dispersing something like, let's say, 850, 900 crores on a quarterly basis, especially in the second half of the fiscal year? So that's my first question, sir.
So you will ask all questions together or can we answer?
Sure, I can maybe tell you 2 of my other questions together and then you can answer them.
Yes.
Yes, sir. So the second and the third questions are, sir, because we are given to understand that your current term is getting over in January next year. So, and given that, maybe the board will only meet for the next set of results sometime maybe in February. Has the board deliberated or have you already applied for an extension, or are you looking to take up some other role and we are already looking for a candidate? Is something that I wanted to understand. And sir, lastly, on the operating expenses, sir, you are already running a very lean machinery. There's not much to read into your operating expenses, but given the fact that you have also been saying that you are investing in kind of building up digital capabilities, have you already started kind of reflecting the investments that you are doing in technology in your OPEX? And sir, a last question that I wanted to squeeze in is, Friday there was a RBI circular which talked about a recognition of NPAs. So if you could just shed some light on that, if you had the chance to deliberate on that.
Yeah, see, I will answer your question one by one. First about disbursement. So yes, we are slightly behind peers because we did not want to compromise on the margins. And as you are aware, all the borrowers are looking at lower rate of interest. But from this month onward, we also reduce the rate because we know that we cannot continue to charge higher rate.
and hopefully in Q3 and definitely in Q4, we give a target of 1,000 crore to purchase in Q3. So we hope that Q3 will be better than Q2 in terms of disbursement. That's the first question. Second is about the delivery. Yes, I will only say I will not continue here. I have got some other work. I'll go to that. I will not say much on that because, as you are aware, so probably in future to see advertisement inviting application. Third, what about the RBI guidelines? About the OPEX? The IT part is 1 or 2 months delayed. Earlier we thought it would be over by December. Now it will be over by February. We are expecting from April we will be able to put a new step to do it. But now it is not reflecting the effect because as you are all capitalized. The effect is without that. Your fourth question was about the RBI guidelines. I will only say that RBI send you quick back to the NBFCs, but they are our liquidator, so I cannot say much on that, except to say that it's really from March 2022, that time we'll see. Right now, we have the only, as you said, 2-3 working days before, we are finding out the impact that will be on us. But right now, I'm not in a position to share any numbers on that.
Sure, sir. Sir, and I don't know if only my line was bad or was it the case for everyone. Sir, I briefly lost you when you were commenting on, I mean, if at all there is any succession planning or what's the plan like. I briefly lost you. If you could just repeat yourself when you were commenting on.
What I was saying was that the board has taken a decision to recruit somebody else and have taken a decision to move on. So that's probably in 1 week or 2 week time we see some ad.
All right, sir. Sir, thank you so much and sir, wish you all the very best for your days ahead.
Thank you. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Sarvesh Gupta from Max Capital Group. Please go ahead.
Good afternoon, sir. So just one question that we have been hovering around this 12,000 crore loan book. So what is the guidance for the full year in terms of the loan book growth? And I'm not sure if I heard you correctly, but are you saying that next quarter onwards we are aiming for a disbursement of around 1,000 odd crore?
Yes, you are right. You heard me right. And if it was not for COVID problems, it would have been higher book. As you know, we are every year increasing the book size. This year we are targeting June, which I told in June, Q3 does not come. We are looking at about 13,000 crore book. 13,000 crore book size by March end.
For March end. And what will be the similar guidance for the NPA numbers?
Now, of course, as your speaker mentioned about RBI guidelines, we have to look at that. But otherwise, we are looking at around 3.5% GNPA.
Okay.
Very much.
Okay. And sir, what we saw this quarter that, in spite of, so we are disbursing like around 500 odd crores, but still the loan book on a QOQ basis came down by a few percentage points. So I think even with like 600-800 crore book, we will disbursement, we will probably be at the same level, right? So I think...
you are right on that, but one thing is that we are aggressively reducing the rate. ROI, wherever to retain the customer to give higher loans, which we are now doing in Q1 and Q2. So customer either what has amount of loan or lower ROI, which we are trying to do. So we are looking at about, say, in 2 quarters, about 2,000 crore disbursement, and we are looking at 1,000 crore repayment or prepayment, and increase of 1,000 crore book size.
Okay.
In Q3 and Q4.
Understood. And in terms of the competitive intensity in the environment, earlier I think the bank transfers were a bit higher than usual. So how are you seeing the competitive environment right now? Are you seeing a similar level of bank transfers, BT out happening, or has it come down marginally because of loan growth in other segments in the economy? If you can comment on that.
It is similar.
Okay, understood, sir. Thank you and all the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Vikram Subramanian from Spark Capital Advisors. Please go ahead.
Hi, sir. Thanks for taking my question. My first question is regarding growth again. So you had mentioned we have been slightly behind peers because we didn't want to compromise on margins. But now that we have started reducing the rates, could you give us some guidance on what kind of yield reduction might we be looking at going forward? And apart from rates, playing around with rates, is there any other strategy that we are implementing to drive the growth to achieve our target?
There are 3-4 strategies. One is on ROI. We have also starting with ROI of 7.25%. We have told customers and customer, as we have told what we have told, it is around 7.1%. We are starting with 7.25%. But we hope that overall we will remain same because we can make up the gap by charging higher to less customers, or to no sell cost. That's number one. Number two, when you look at the other strategies you are asking, one is ROI, second is, say, we are trying to make the branches more aggressive by coordinating with corporate DSA, TF, and also picking up the second process. And third, we are launching fee selection between processing fee and all that, which is another ROI. So we hope that this will all result into something good. One is the cost reduction, and second, cost customer. And second is the after processing, third is the DSA, corporate DSA.
Okay. Sir, one more question, if I may. On management continuity, so I think I heard you saying that you will not be continuing, and then board is in the process of...
Let me clarify that is a proposal put up in the board. We'll know in 1 or 2 weeks what will happen. Because as of now, my contract is till 2nd January 2022.
Okay. But in the evaluation stage, if we are evaluating, successors, would it be internal or external? Is there any indication on that side? That board will decide it. So I cannot reply to that question. Okay, but we will get to know within the next 2 weeks.
Yeah, correct.
Okay. And finally, just one last thing, sir, on the RBI circular. I understand we will still be in the evaluation stage because it's not even been a week since the update, the clarification came from RBI. But the concern here is not just for us, for every NBFC, all of the updates seem to be either retrospective or effective immediately. So is there at least any ballpark range of, figure, back of the envelope calculation figure of how much impact we could have on headline gross stage 3 or GNPA number? Because of
I cannot declare number, but RBI knows that people have a adverse effect, so they given for one time by March of 2022. So first thing we have done immediately is that we are telling all of our branches to collect for the orders. If we collect full orders, then it does not matter whether the control is better or not. It matters only if we do not collect full orders, we collect only what is called as critical use. we are telling today, we told other agriculture to collect full overdue now. And I think by the time this is evaluated, that is March 2022, 5 months are there. Public operator will get into pay the consequences, and as of now, it is very difficult to tell the number. But generally, as you know, in quarter ending, we have a lot of incentives, option process, and so many other things. Generally, we perform that Q4 is better than all 3 quarters. I expect that will continue here.
Got it. Okay. Thanks, sir. That's okay.
But I cannot tell a number, not now.
Sure. Thank you.
Thank you. Participants, you may press star and 1 to ask the question. Ladies and gentlemen, you may press star and 1 to ask the question. The next question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yes, again, thanks for taking my question. So if I heard you right during the
Abhijit, sorry,
remarks,
your voice is not coming clear. May I request you to speak through the handset?
Is it better now?
Yes, thank you.
Yeah. So if I heard you right during the opening remarks, you suggested that going forward, we will be looking to target quarterly profits of about 100 crores, given that, credit costs are expected to normalize. What I was trying to wrap my head around was, you also suggested that we are now kind of trying to, or rather we have already cut our rate of interest. And when I look at our cost of borrowing, at least on a calculated basis, it gives me the impression that our cost of borrowing seem to have bottomed out. So if we are going to cut our interest rates, that will impact your maybe spreads and margins, and given that the current operating expenses do not reflect the investments that you are doing on the digital side, are we just trying to suggest that this normalization in credit cost itself will help you deliver 100 crores of PAT in the quarters to come?
So there are 2 parts. The ROI has not yet, according to us, not yet bottom out. While the overall market may bottom out, but still some of the borrowing buyers are at a higher rate. We are functioning and at a lower rate. So probably we hope it will go down by at least 20 BPS in maybe next 3 to 6 months. Second, when you look at the higher profitability cost, it is direct relationship with the book size. Because while you reduce the rate, but in our case, the advantage that we have is we are able to charge a wide variety of rate, starting from 10.25 to 14%. It is not that we are charging 0.25 to one customer will charge lower rate to all customers. No. So we hope that by increasing book size, because that is the biggest challenge for us. And we are expecting by March end, it will become 13,000 crores. That is what we are expecting. So if the book size increases, obviously mainly all the overall problem will increase. So we are betting on the book size increase.
Right, sir. And so this 13,000 crore guidance that you're giving, that is for the end of this fiscal year, right? Over the next 2 quarters.
March 2022. Yes.
Yes, sir. So the next question is for Bala. Bala, if you can just help me. I'm seeing we have about 375 crores in ECL provisions. What is the corresponding IRAC provisions that we have now?
So we are not disclosing that, Vijay.
Okay, no worries. I will come back in the question queue. Thank you so much.
Thank you. The next question is from the line of Akash Jain from Money Curves Investments. Please go ahead.
Hi. I have 2 questions. I think one question is something that I think all investors have been asking every quarter, and that is on growth. And I think to some extent, Gupta has handled that question. But I'm just curious because, see, we are obviously we are suffering because of balance transfer out by banks, right? But there are so many affordable housing companies in Tamil Nadu itself, right, in our core market, which are lending at 17-18%. And now some of their customers have a track record, so we can also get a comfort around their payments, etc. Why are we not still being aggressive in doing BT in on balance transfer for such customers? Because if we are losing customers, we should be very aggressively getting customers from others also. That is one part. The second part is on collections. We have restructured the book both in restructuring 1 and restructuring 2. Just want to get a sense on what is the kind of collection efficiency we are seeing in this restructured book. Do you see some of the client accounts falling into delinquency, or you are seeing strong recovery trends on the restructured book? Thank you so much.
Okay. See, which I told you last time also, I repeat again, that the loans which are of smaller size, like 10 lakh, 15 lakh, they are not being taken over. But in the past, what they done was, for 10 to 15% of the size was the high ticket loan, say 75 lakh, 1 crore or so on. There the book size is so big, or the loan size is so big that we cannot stop them from doing. Otherwise, we are doing whatever we can, not only to stop takeover, but also to take over the loans. Second part is, when you said about what is the second question?
The collection efficiency on the restructured book.
See, on the restructured book, you have already given them customer pay long road, so we have, but as far as maneuver of between. So the chef training that I will say is above, right now is more than 100%. But when you say in future, the restructured loan book may become and be also, I will only take you out to last financial year. You know, when we were doing, RBI has allowed deferment without paying converted these loans. So we had the most with 7,500 crores of deferment in the first bucket, or the first instead of RBI, and the second was about 3,100. Whoever came to us, we allowed deferment. That time also, the question that was being put up to us was that when you give deferment, will you be able to collect? But as you all know, that after August, RBI did not allow deferment, they allowed restricting 1, but we did less than 100 crores in this, other less than 50 crores in this one. Despite that, our GNP as on March 21 was less than 4%, 3.7%. So, further is that our customers, they pay on time. It is only that they are hit by pandemic, they are not salary cost. And they are selling some shopkeepers, selling keys, or some other small things. They are not able to go on time. But now, as my deputy mentioned just now, that things are improving, and hopefully Q3 will not come. Then, by March, everything will live right. That is what we are expecting. And we have to exhort for that.
Yeah. So if I understand you correctly on the first question, you are basically saying that a lot of the affordable housing companies are giving very small ticket size loans, and that is why it is not necessarily economically useful for us to take over loans of those ticket size. Am I right?
No. Brother, you are right. मैंने तो पानी पिघला समोसा वाला जो कि smaller loan at a rate because you collect on weekly basis. We are not in the red market. That is one of the reasons. But other reasons are we are liquid meter. So we are doing, but you are frustrated. Hello? Yes.
Akash, do you have any follow-up question?
No, I'm good. Thank you so much.
Thank you. The next question is from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hi, sir. Sir, my first question is on loan book growth. So if you could indicate what growth are we going to make second half and also going ahead in FY23?
See, first this year we look at, as I told earlier, we were good budget, we look at 13,000 crore book. If it is improved better, then obviously 23 as of now, we are not highlight the number, but we look at how it was in 23, somewhere close to 15,000 crore, but number are not highlighted, so I not still a number to you.
Did you say 15,000 crores? I'm just...
It will be close to that, but we are not highlighting the budget as that.
Okay. And sir, if you could indicate what credit costs are you going to maintain going ahead in this year and next year?
You look at 0.5 only. Only Q1 was higher because of the provision, 10% provision that we should do on the security. But assuming no such thing which is required, then we look at 0.5 only. 0.5.
0.5. Next year you are saying 0.5?
Yes.
Okay. And sir, what branch additions are you going to do going ahead?
See, before COVID, we approved somewhere between 15 to 20 every year. We are looking at the same rate, 15 to 20 for this year and for next year.
Okay. Okay. And some ROE or ROA guidance that you could share, sir?
Which guidance?
ROE and ROA guidance.
You will look at ROE of 2.2, around 2.2, and around it could be higher, and ROE of around 14 to 15%. Because our leverage is low.
So ROE of 14 to 15% you are saying for this year, sir, or next year?
No, it will be for next year.
Okay, okay.
Just 6 months around 12%, so it may go slowly, but not much.
Achha. Okay, got it. Thank you.
Thank you very much. The next question is from the line of Vikram Subramanian from Spark Capital Advisors. Please go ahead.
Hi, sir. Thanks for taking the follow-up. Just one clarification on the previous, the answer that you gave to the previous participant. I missed on the credit cost guidance. I think you mentioned something like 0.5%. Is this for FY22 or 23?
No, this year we did Q1 higher, so until from now onwards. Q3, Q4 this year and next year whole.
Okay, you mean, I don't get it, sir. You're saying 0.5% for Q3, Q4 or?
No, until 0.25 for Q3, Q4 and 0.5 for next year full.
Okay. So for FY23, you're saying 0.5, but given that we are in the...
0.5 and FY22, 0.25 for towards December and January, March.
Okay, got it, sir. No, but what I was about to ask was 0.5, 0.5% of credit cost for FY23, given that we are targeting reducing GNPA, trajectory, and therefore we will see a bit of release of provisions. Doesn't 0.5 seem a bit high, sir, for targeting?
0.5, when I say it is high, you are right. But personally, I believe in always keeping some cushion in hand. So 0.5 is a little higher side, but 0.5 I think is maximum.
Okay. No, I'm just trying to ask, are we envisaging any major write-offs in FY23? Maybe coming from is that the reason, or we're just being conservative?
Yes, see, what happens, write-off, one is as per our policy, we write off only where there are 100% provision, number one. Number 2, which are either hot cases or an NPA for 3 years. So when we write up, it will only affect our NPA percentage. It will not affect anything else. Provision we make only, we write up only 100% provision or fraud cases or which are 3 years or more. So it will not affect any, it will affect only book size but nothing else.
Okay. Okay. Thanks, sir. Thanks for the clarification.
And I'll add one more thing, that though it is a draft, but it is a draft only for the purpose of book. Only account department knows it. But in case the RMs are not aware of that this particular account is a draft. So it continues to make effort to recover.
Okay, sir. Thank you. Thank you. Thanks for that.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Praveen Mule from Prabhudas Lilladher. Please go ahead. Praveen, may I request you to unmute your line from your side and go ahead with your question, please?
Hello. Yeah, am I audible?
Yes.
Yeah. So thanks for the opportunity. I have 3 questions. Firstly, on your stage 3 has been lingering at 4% plus levels. How do you see the headline asset quality shaping up going ahead? And if you could provide any ballpark number for this. My second question is on, could you please provide the breakup of stage 2 and stage 1 assets and write-offs during the quarter?
One is write-off during quarter. I'll answer first to last question. First, the write-off is very small, about 4-5 crores, not much. Second is your question was about headline number of the NPA of the set 3. You are right, we are at hovering around 4% in June to September, but as you heard, this was the time when cooled down at its peak. And February is 30 better than June. But you look at March, last year March, for settled around 3.7%. So our target is for this March 22 that is, we are targeting between 3 and 3.5%. And assuming that Q3 does not come, like in Europe it is again spreading, then we are confident that we will achieve that number. Of course, we just see what will be our impact. Now, that way the CRFS is going back. But about stage 1 and stage 2, Bala? Stage 1 and stage 2.
Yeah, stage 1 is around 85%. And stage 3 is, 4.3%. Yeah.
Hello?
Hello?
Yeah. Thank you.
Yes, sir, you're audible. Praveen, do you have any follow-up question?
No, thank you.
Thank you very much. Ladies and gentlemen, that was the last question for today. And now hand the conference over to Ms. Shweta Daptardar for closing comments.
Thank you, Neerav. On behalf of Prabhudas Lilladher, we thank the management of Repco Home Finance for the opportunity